That said, Alana, we've got Russell on the line. What do you want to ask him?
What are your thoughts on hard money loans? So buying it through hard money and then refinancing through.
So that's a very good question. I'm going to answer that very simply, right? Debt is not to be feared. Debt is to be understood, right? So if you understand the kind of debt that you're getting, you're going to thrive. I'm all for bridge and hard money. I don't like to use the word hard money because there are many bridge options that you can get a 5.5 to like a 6.5% rate. So I would say go for it. I would say if you have an opportunity to go so, but you're limited on the amount of cash, I would say go for the bridge product, right? Understand what you're getting, understand what type of loan you have in front of you, and purchase that property.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Very excited for today's show. We got another Ask the Expert episode for you. We got two amazing people on the line with us. We have our experienced investor, Russell Nova, and we got Alana Murphy in the aspiring investor role today. So Russell, you're up first. So, welcome to the show.
Appreciate it. Thank you very much for having me, Brian. I appreciate it. Thanks so much.
Yeah, awesome. So first of all, great meeting you in, let's see, it was Orlando a couple of weeks ago, right?
Yes.
Yeah,
It was a
awesome.
great time.
Yeah. So all these conferences are awesome. Good to meet people. Great to meet you. And that said, why don't you tell us a little bit about yourself?
Okay, sure. So my name is Russell Nova. I have two roles actually. So I am a principal at Cornerstone Capital. We're a debt advisory firm where we specialize in financing multifamily properties, on a commercial, mixed use, industrial, healthcare. My second role is that I'm a managing partner at Stone Street Multifamily Group. We're a real estate investment firm where we purchase value add and cash flow properties. We've been doing that for about 4 years now. So aggressively, I'd like to say, and that's just me, and that's my day to day. I have two jobs that take tons of my time, and I'm very happy and fortunate for that. And it was great to meet you at the event as well.
Yeah. So one question: which job came first? Were you in the capital job first, or in the acquisition role?
It was actually the capital role. I've been doing financing for the last 10 years now.
Okay.
We started with the residential prior to 2008. We were doing primarily only residential properties. Then after 2008, when we had the meltdown, we decided to just go ahead and just merge out into the commercial world. So effectively, ever since 2009, I would say, we've been doing the commercial route. So I have been financing, and I've been in this space for a very long time. So I'm familiar with so many different aspects of multifamily.
Yeah.
So, definitely on the residential and the commercial side of the capital market side.
So what made you decide to switch, move from the capital market side, funding the properties, to actually being on the ownership side?
So it actually, so we've been doing financing for, let's say, for the last 10 years now, right? And 4 years ago, something triggered in me, right? Saying, hey, listen, I'm helping out all of these sponsors. I'm helping out all of these operators acquire these properties. Now, I'm there. I know the aspects of it. I know how to underwrite. I know how to analyze. I know how to analyze. I know how to do all the due diligence. And at some point I said, hey, why don't we switch, or why don't we try to get involved on the owner operator side? And 4 years ago, in September, we went on and we purchased our first property, which was a 33 unit in Miami, Florida. And we never looked back. It was something natural. It was something that came together because of all the relationships that we have and that we've built over time. It just felt good. It just felt like this was the right move. And ever since then, I've always been learning and kind of just going and speaking to other people and just having, mentors come to me and I come to them, and just having those kind of conversations.
Nice. And being in a related market, you mentioned it was a pretty smooth transition. Just tell us what it took to go from one side of the fence to the other.
So it's a good thing that I do have a very good support system here, right? So at Cornerstone Capital, I have an entire team that really handles the debt side. Now, I haven't taken a step back from Cornerstone Capital. I do have a great partner that handles that, but on Stone Street side, just going and leaping over kind of made sense because of all the financing that we're able to do, right? So your biggest partner in this business is your capital partner, right?
Yep.
That is one of your biggest partners. So if you have that in line, you could really learn and just get familiarized with what it takes to, running a property, from asset management to property management and all these other things.
Yeah, I think that understanding or that lack of an understanding, several years ago kind of impeded me in a way. And I'll say why. I mean, most brokers know what it takes to get a commercial loan. And when I first started calling brokers, I had no idea what it took to get a commercial loan. And brokers are smart. They try to weed out people who aren't ready for that commercial loan step, right? So you have to have your key principal, your loan guarantor if you've never done it before. You have to have your net worth. You have to have liquidity and a bunch of other things in place before you can get that loan. And I would say for me, not having that understanding definitely set me back. Whereas you were able to really quickly make that transition. So in a way, I kind of wish that I was in a related field of multifamily, for 10 or 15 years prior to making the switch myself. But it is what it is. But so tell us about one of the properties you guys have done. Pick your favorite, but give us an idea of the type of properties that you guys do.
Yeah, so that's a good question. So one of the properties, I'll just throw it out there. We've been doing a lot of business in the Texas market, right? Because that's where everyone is kind of fluctuating towards. So in 2019 and 2020, we've been buying properties in the Texas market, right? The properties are great. It was still saturated, but not as much as it is now. So we co-sponsored a deal. It was 240 units in Houston, Texas. That was a very, very good one, only because the cash flow and the CapEx project was really, really good. And we saw the value right away. We also purchased 104 Dors in Lubbock, Texas.
Okay.
So that's something that we actually purchased during Corona, which was the mecca of Corona. And obviously, because of our relationships with our banks, we were able to really get financing even during those times. It does help to make sure you have a good sponsor, you have the net worth and liquidity as well. Let's see some other great deals that we've done. We did 109 units in Augusta, Georgia, which was really good, which we're planning on exiting in January. So that's pretty good. And we have a couple of deals under our belt as well. But since you asked what was my favorite type of deal, I'd like to say that a good deal was the Lubbock deal, only because it is a tertiary market, and not many people want to jump into that because of also the banking situation. They may not like it because it's a smaller market, but we see value in that, and that's really the way that I work.
A lot of the bigger players now are actually moving to tertiary markets. And if you got in a couple of years ago to places like Lubbock, I'm here in Lubbock more and more frequently, today than I did 2 years ago. So Neil Bawa, came on the podcast and talked about the tertiaries are going to be the next big wave. So and I happen to live in a tertiary market myself, so I can see the growth that some of these tertiaries are getting, and I think it's a smart play for lots of reasons. And the only negative to it, I think you just mentioned, is a lot of times lenders aren't as comfortable in tertiary markets as they are in primary markets. So you have more opportunities for growth. I think here, just your debt, you got to be a little more careful planning for your debt.
Absolutely. I mean, you have to get creative when you get into tertiary markets, but at the end of the day, if there's a way, there's a will. There's a tremendous amount of capital out there right now, and if you position yourself correctly and with the right people, there's always a way of you getting the financing.
I think that's absolutely true. That people say, if you have a good deal, the money will come, and debatable how true that is. But if you're persistent and you have a really good network, I think that's more and more true. So the more persistent you are, and the better developed your network is, I think that statement tends to ring more true. But I remember talking about that Augusta property, briefly in Orlando, because we've got an Augusta property and one that we should be closing on soon. So
Amazing.
lots of good stuff there. And I was very happy, when you said what your exit price was going to be, because our basis is a lot lower than what you think what your exit price is going to be. So, but yeah, knock on wood, and I wish you guys, the best selling that thing.
Appreciate that.
All right. So that said, something I'd like to ask everybody, and it's kind of peering inside, your heart and soul here. What is your motivation? What is your big burning why for doing all of this?
Well, I gotta say, I'm generally a motivated individual, right?
Mm-hmm.
It's more or less when I wake up in the morning, right? And I don't want to sound cliche, but I have a switch that goes off in my head, right? As soon as I wake up in the morning, it's more or less, hey, it's time to get to work. It's time to do a lot of great things. I even, I've had conversations with my girlfriend, and she's like, hey, you never have an off switch. It's even harder for me to relax on the weekends as well, because there's so much going on. There's stuff on the financing stuff. There's deals that are happening right now that we're best and final. So I'm generally a motivated individual because I've been in this business. I see the potential. I see the future, right? And it's really about just getting out there and continuously making the connections that you're making, right? So I'm all about that. It's just who I am. I don't think I need other people or anybody else to tell me, hey, I need you to do this. I need you to do that. I'm there already. So that's just who I am.
Nice. I love it. I wish I'm similar in a lot of ways. But I wish my internal drive, was in a little higher gear a lot of days. But anyway, appreciate that. And so, last question for you before we bring on Alana: what's next for you?
Good question. So we have a couple of things that are in the pipe right now. We're closing on a 92 unit, and so next week we're closing on 92 units in Jacksonville, Florida. We have a live offering right now in Tallahassee, which is 136 units that is steered to close in December. And we're best and final for two other properties in 2022, one in Orlando and one in Atlanta. So we're already cooking, and we're already strategizing for what we're going to do for the following year.
So you guys are hot and heavy on the Southeast. It sounds like, 2 in Florida, 3 in Florida, 1 in Atlanta that you guys are looking at. Two under contract, ready to close, and 2 hopefully new acquisitions.
Absolutely. So that's our business plan, and that's our model going forward. We're going to stay in the Southeast. We're going to only concentrate on the Florida and the Georgia markets for 2022. I can't say if I'm not presented with a great offer, somewhere outside of those 2 states, I wouldn't jump in. But my main focus is somewhere where I can service the debt. If I need to get on a plane and I have to get there within an hour and a half time, I'm there. So, that's where it is. And that's where our heavy focus is going to be for 2022.
Yeah, I think that's smart. Being responsive to the brokers on one side of the fence and to your property managers and the asset management, being able to get there quickly is absolutely crucial in this business. You want to make good use of your time, and you want to be able to get to the properties and make sure they're operating properly. So super simple. All right, let's shift gears and bring Alana on. So Alana Murphy, welcome to the show.
Thank you. Nice for having me.
Yeah. Yep. No problem at all. So do us a favor. Tell us a little bit about yourself.
My name is Alana Murphy. I brought my first 3 family about 19 years ago, 1 year out of college. I had a person that was a friend of a family that basically said, always buy real estate and land with any of your extra earnings or extra savings. And then at one time said, buy something and live for free. So I essentially lived for free for my whole life until I moved down here to Texas, where we actually bought a house. I read the Purple Book like a lot of folks did. And I subsequently, we brought 2 more 3 families and a 2-family, thanks to my husband. But we've been property managers pretty much our whole lives. And now we're ready to step into the commercial real estate side of things.
Nice. Yeah, I like that. I mean, the Purple Bible, everybody knows what that is, I think. And I think that started a lot of people's, journey in collecting assets, buying the assets. And I love your idea. Let's try to live for free. It's typically the largest expense everybody has, but if you can figure out a way to, buy a property and live for free, I mean, you're taking that expense away, you're adding equity. I think that those are all really smart moves. So good on you. So let me ask you the same question that, I ask everybody. What is your big burning why?
So two things. The first thing, I think through the kind of seeing the chaos around, I kind of saw my life kind of from a bird's view. And although I did some good things, I think, with the stock market, buying Amazon when it was down to 1,800 and now it's back up to 3,300.
Nice.
I realized that the passive income that wasn't reliant on whatever craziness the stock market was doing, I didn't have enough. And so that was one reason. Second reason, I have two boys, age 10 and 8. They will be going to college, and that's going to cost me an arm and a leg. So I need to step up my game.
Yeah.
So those are my two whys, and to just have that passive income to support my family.
Awesome. Well, sounds like you got a really good start so far, and hopefully we can help you make the leap into multifamily. But that said, Alana, we've got Russell on the line. What do you want to ask him?
Hello, Russell. Thank you for being here.
Of course, Alana, how are you?
So my first question is around financing, and I know you guys talked a little bit about that. I have been putting in LOIs with a couple of partners probably since February. I've built some relationships with a couple of finance folks, but there's so many questions around how does a new investor get into commercial real estate? How do you guys see us in a good light, and what sort of things can we do? We can have the liquidity, we can have whatever the credit score, I can have the 3 families, but I don't have commercial real estate. How do I crack that nut?
That's a good question. So when it comes to the KPs, a lot of lenders are looking towards that because it's more or less the key principle, right? It's the net worth and the liquidity. A lot of lenders want to see that they are an active member within your group. Now, let's say, for example, you don't have the experience, right? And you're trying to go after a larger deal. I would tell you, hey, start out with something smaller. Go after a 10, a 15, or 20 unit. Don't go after the 100 unit right away, because you personally want to have that experience. You want to learn, right, exactly what it takes to do all of that. Once you get on a deal, 10, 20, 30 unit deal, you will then have the experience with the lender, right? The lender would say, hey, she's already on my approved list. You can then move on them to larger deals. You can easily avoid that step, of course, by bringing on a KP, a known principal, and other sponsors that fit that actual criteria. But don't forget that many of these lenders require at least 10 to 15% sponsor equity into the deal. So the larger your deal is, the more monies everyone has to come in. And usually these KPs don't want to come in with any extra money because they're signing on the loan. So, to answer your question, I would always say, and this is what I tell a lot of people as well, and I speak to individuals, is that start out smaller. You don't need to go for that 100, unit deal on your first, second, or third deal. Learn everything there is to know. Get on the approved lenders list, and then you can start making moves for yourself.
Yeah.
Okay.
Yeah.
Thank you.
I'll just add one thing, try to look at it from a KP's point of view as well, and do everything you can to mitigate the risk for the KP. If they're signing on the loan, they're putting their balance sheet on the line. And if they're multifamily operators and that loan goes south, there's a chance they may never be able to get another commercial loan again, or have to clear a lot of things up. So do what you can to mitigate the risk. And I think what Russell said about the smaller properties, there's a lot less risk in the smaller numbers, so smaller properties, if I'm putting my balance sheet on the line, it's a lot easier to do for a $1 million property than a, $10 million property.
Okay, thank you. And I want to ask one question, follow up to that. What are your thoughts? So get a small property, let's say, $1 million or $1.5 million. What are your thoughts on hard money loans? So buying it through hard money and then refinancing through.
So that's a very good question. I'm going to answer that very simply, right? Debt is not to be feared. Debt is to be understood, right? So if you understand the kind of debt that you're getting, you're going to thrive. I'm all for bridge and hard money. I don't like to use the word hard money because there are many bridge options that you can get a 5.5 to like a 6.5% rate. I'm all for it. right? When you go after a bridge product, you can get a little bit more LTC, right? Because it's a cash flow, it's a cash value. You're building the value. So I would say go for it. I would say if you have an opportunity to go so, but you're limited on the amount of cash, I would say go for the bridge product, right? Understand what you're getting, understand what type of loan you have in front of you, and purchase that property. Do your business model. Just get in there, fix everything that you need to, start bumping up the rents and refi out. And just one other thing I always want to let you guys know is that bridge lenders are not here to hurt you. Bridge lenders are here to work with you because they understand if you're in this field, you're going to do bigger and better things at some point. So not to be feared.
I love that
All right.
quote. I'm probably going to make some, definite social media posts on that. Bridge debt debt is not to be feared, it's to be understood. I love that.
That'll be it.
Yeah.
Absolutely love that. Russell, you talked about, I think you said we, so you have partners. I wanted to understand how you found your partners and why do you think it's a good relationship, and any advice for new folks going into partnering.
So partnerships in this business is very, very crucial, right? Because you can't do it on your own. And even if you wanted to do it on your own, stop, because it's never going to work. You need to have somebody there that you can rely on. When it comes to the financing business and the debt advisory firm, so my partner is a childhood friend. We've known each other since we were 5 years old, and we've grown up together and we work together and we're best friends. When it comes to the multifamily acquisition side, believe it or not, that I met my partner at one of these events, just like I met Brian. It was more or less just meeting somebody, clicking with them and saying, hey, you bring value, I bring value, let's do something together. I think that if you initially point out exactly what each individual has to do in the partnership, I think that you guys can really go far away. Now, I'm sure that you're going to overlap each other and say, hey, I know I can do this or I can do that better, but that's okay. It's all about really communication. So I'm all for partnerships.
Yeah. In our partnership, we have a lot of overlap, but between the partners, we have every direction covered, as far as, skill set and whatnot, but 100% agree with what Russell said there.
So Russell, I know you've been in the space more on the financing side for a long time, but what do you know now, right? 5 years later, that you wish you would have known earlier about the commercial real estate?
You ready for this?
Yes.
I wish I started earlier. I wish I could have started earlier, but I knew things were happening, but I was so embedded into what I was doing because I was literally helping people. I was helping them achieve, their goals of buying property and ownership, and we saw the potential. If I would have gotten involved a little bit earlier ago, it would have been amazing. It would have been great for everyone that I worked with because the value was there. Currently up to date, in 4 years, we own 1,500 units and counting. I could only imagine if I would have gone into this business 8 years ago or so and really gone into market, but that's okay because I'm still bringing value to every individual that comes in front of me, right? Every individual that I work with, we always bring value. If there's no value, there's no point.
Yeah, I would have started a lot earlier too. I mean, I think everybody is going to say a similar thing. I would have started earlier.
Oh yeah.
I 100% agree with that. I think, I started buying in Boston, and, I got real nitpicky when I was buying additional 3 families, and I'm like, I should have just brought it. It doubled in price in the last 15 years. So, okay. My next question is about JVs versus syndication. Wanted to understand your thoughts around both, maybe with the financing spin side of things. And do you do both?
Yes. So, syndications and JVs, I'm all for both of them. I love them all. I've done many syndications, and I'm actually doing a JV right now, which is the 92 units that we're closing next week. When it comes to a syndication, investors require a certain return at a certain time frame, right? So you have to really get back to them. You have to return a certain amount of funds to them at a certain time. When it comes to JV, it's just everyone getting together. There's no time. You can keep the property for 5, 10, 15 years, right? You could accumulate them the actual depreciation that you're having overall time. It's really about like who you're speaking to. When you come to a JV, you're all coming together and you're figuring out, okay, we're going to do this together. Here it is, versus a syndication where you have to raise the funds, right? You have to get a 506C, you have to get a syndication attorney. It's a little bit more work when it comes to a syndication because there's a lot of steps involved. But I would say that with the syndication, you're getting much more people involved. You're growing your network, right? With a JV, it's just smaller groups of individuals. An individual like yourself, I'm assuming you want to grow your network. So you want to allow people to come into your network. You want to make sure they're aware of the deals that you have going on. So both are very, very similar. It just depends on what you're trying to achieve for that certain property.
You know, Russell, you brought something up I never really thought of. I mean, we have 9 properties, 7 were syndications, 2 were JVs. Most people in our network don't know about those 2 JV properties because we didn't go through the process. We didn't send out the email blast. We didn't do a webinar for people, you know, and I think that's a really good point that I never really realized is, you know, when you do a syndication, you're out there pushing it, especially if it's a 506C and you're blasting it out on, you know, your emails are going out, your social media campaign, you know, it's going to do a lot more for your marketing, you know, having a syndication. You know, our JVs, we just did very quietly with the partners who we brought in and we're quietly operating them. So I never really thought about it from that perspective. And thanks for bringing that up.
Absolutely. I mean, and when it comes to syndications, I mean, you're going to grow your network, like it or not. You're going to have people come to you and say, hey, what do you have next? What's going on? So that's why I am a fan of the syndication model, is because I'm getting it out into the market. I'm saying, hey, this is what I have. If you're not ready for this one, get ready for the next one.
Yeah, absolutely.
So this question is kind of a play on what I asked earlier, but I don't know what your involvement is with Newbies, but what is some of the mistakes that you see newbies coming into commercial real estate doing? So
yes, so we do work with new individuals that are trying to get into this business. One thing that I would say, and what I'm seeing is that they're trying to shoot for the stars. They're trying to go after properties that's a little bit outside of their comfort zone, right? I would say don't do that. I would say start with like 10 to 30 units. Just get comfortable with it. Obviously, Fannie and Freddie require that you have experience in this business. So unless you can bring on KPs and sponsors, a bridge route would be best for you. If you can go after those small properties and build your portfolio and put your experience on that, you can then go after. And I've worked with many people in Texas, in Florida, in North Carolina, because they see others doing these larger properties. They all of a sudden want to jump in and say, hey, maybe I can do that. But you're not learning the business when you're trying to go after things that are not real. So I would strongly advise that you don't shoot for the stars. Learn everything you can. Get a couple of deals under your belt. Then you feel confident saying, yes, I can go after 150 units. I can go after 250 units.
Smart. Okay, excellent.
Yeah.
So I want to switch gears a little bit. What keeps you up at night? What worries you?
Deals. There's so many things. Like it's like anything else. We're in the business of doing deals, right? So you're always thinking, what if this doesn't happen? Or what if that deal doesn't come in? Or what if the markets just shift and not in our direction? What if we don't hit the right rents, right? What if we don't capture the rents that we projected for our returns? So there's a lot of things that really go on, through my mind every single day, especially since I'm active on the debt and on the acquisition side. But when it comes to work, when it comes to that, those are my fears. It's like, hey, what if we don't hit the projected markets? What if we don't hit the returns that were supposed to be specified to our investors? You don't want to do that because you want to continuously grow your network and you want to make sure that you return the returns as needed. That's my thing. And I'm sure many others can relate as well, is that they don't control the markets. They can only project and do the homework that they can do.
Yep. Man, if I had a magic wand, controlling apartment investing would be a lot easier. The biggest unknown is that market. What's going to happen to the market? What's going to happen to to rents, what's going to happen to cap rates, what's going to happen to interest rates. Those are all the unknowns that you try to mitigate the best you can. But end of the day, you control what you control. And I hate to say you hope, but you really hope that those things go the right way for you.
Now you ask me why I can't sleep good at night. There you go.
Boom. So many things. Yeah. So.
In talking about the market in the world, are there things that you do differently now based off of what or are we on like 20 years of Corona, but are there things that you do differently now after Corona or during Corona that you didn't do before?
Yes. So now I communicate a lot more, right? I mean, Zoom has become a very, very popular thing now. Prior to that, it was more or less just phone calls. We didn't think to get onto Zoom and really have these kind of conversations. We've been doing a lot of Zoom calls lately. I've been traveling even a lot more now and really seeing the properties. Prior to me getting into contract, one of the rules that I have for my entire team is that I need to be on site. I need to meet with the broker. We need to review all the documentation, the asset, on the T12s. Prior to Corona, it was more or less, hey, if it made sense, it made sense. I went online, I looked it over. Things have changed. So I really want to see that there are individuals in these units. They're paying rent, because there are some times, during Corona that people really aren't paying. So you want to make sure that reflects the rent roll, right? So to your point, I now travel to make sure that there are people actually living in these units. Mm-hmm. And not versus what they say on the rent roll. Prior to Corona, I didn't care. I took their word for it, versus anything else. Now, what the things have changed.
Yeah, so somebody in my network, going along the same point, somebody in my network I was talking with them last week. They bought I think a 24 unit property, and the previous owner said collections were about 20,000 a month, right? And he's like, we collected 8,000 this month. He's like, I mean, we realized that a lot of these people just haven't been paying, and that's one of the things I think, Corona's allowed people to do is just not pay. And, if they go through certain steps in certain locales, they're eviction proof, so you file certain paperwork, and that's absolutely something that's come up because of coronavirus is, the eviction moratoriums, and some cities and states are making those even, putting more teeth into those, the eviction process. But absolutely, a thing, you have to make sure there's people there. Get into when you're out there, when you're doing your due diligence, get into every single unit, do exactly what Russell's saying, make sure there's somebody living there, and, make sure they're paying their rents, do what you got to do to have that warm and fuzzy feeling before you jump in further.
100%. And if not, it should be a reflection of price.
Mm-hmm. Yeah. Absolutely. Well, we have time for one more question. So Alana, if you've been saving one up, go ahead and shoot your shot here.
All right. Well, so last question. So I'm a learning junkie. I love podcasts, Audible, training. I signed up for a coaching program, so I have a coach going through this process. Anything you can share, from books to podcasts, of course, this wonderful podcast, training, anything that you would suggest for newbies?
Yes. So I'm a learning junkie as well. I love to learn. You can't stop learning in this business. You have to learn. You have to listen to people. There are tremendous amount of events that are happening all the time. There are many mentors that you could actually go and listen to. For example, Jake and Gino guys, they're great. They're smart. They have a lot of mentors and coaches that could really, just teach you everything. The Multifamily Masters is another great one that I'm actually personally speaking on when it comes to the financing panel. Rod Cleave, for example, is another great guy, has been through everything. And all of these people that I've just mentioned to you have mentors in-house and have individuals that want to teach you. It's never about spending money so they can help you. They're open and saying, hey, if you want to be in this business, join my community, join my group, right? And I can teach you everything that I've learned. So these individuals have been through it all, the good, the bad. They lost millions and millions of dollars. They've gained it back through ownership. Mm-hmm. So I would say never stop learning, and always reach out. There are people that do want to genuinely help individuals.
Thank you.
Awesome. Well, hey, thanks for that. We are coming up to the end of our time limit. So one last question for each of you. And Russell, you get to go first. How can listeners learn more about you?
All right. Well, so personally, on the financing side, it will be our pleasure to assist any owner operators with financing of multifamily property. Our team has been extremely aggressive. We finance roughly anywhere from 750 to about $1 billion a year in volume wise. In regards to Stone Street Multifamily Group, we have an active deal currently right now, which is 136 units in Tallahassee, Florida. It is a student to market conversion. You can reach out by visiting stonestreetmfgroup.com or stonestreet.invportal.com. That has all the information on there. We should be closing roughly towards the end of November, beginning of December on something in that nature. But on there, we'll have all updates.
So Alana, same question for you. How can listeners learn more about you?
I believe LinkedIn is probably the best way to reach me. It's Alana Tyler Murphy. There are a whole bunch of Alana Murphys, but Alana Tyler Murphy on LinkedIn.
All right. And we're going to put links to the methods these two said we can contact them with in the show notes. So LinkedIn, websites, whatnot. It's all going to be in the show notes. So if you want to reach out to any one of these guys, definitely, check out the show notes and, tap the link to learn more about them. So that said, thank you so much for coming on the show to both of you today. Very much appreciate your time. And this was a lot of fun.
I appreciate it. Thank you so very much for having me. Alana, it was a pleasure to meet you. And Brian, thank you very much.
Thank you.